Hi, Brad.
Big desk. I feel like good to see you way over there. Is this a case? We hear a lot about tariffs. Yep. But nothing has really happened. Don't tell anybody.
Well, that's what's going on here. I think the market is right to fear tariffs, but at some point we have to see them. And so far what we've heard is a lot of bluster. But yet we had the 25% tariffs that have been postponed. We had 10% on China, but China didn't really retaliate. Yesterday we had the big announcement about the potential for reciprocal tariffs, but the market rallied because it realized we don't really know what those are and when they're going to be implemented. So I think this is one of these situations is the market is right to be concerned about tariffs, but not necessarily right to panic about them until you see basically don't fire until you see the whites of their eyes.
And we may never see the whites of their eyes. I think that's what the market is saying, that the tariffs, while threatened, may not happen. I think that's why we're seeing part of the market's run. It's also momentum. But what if we do see them?
Well, if we do, then we got to think differently. I think what's going on now is the market may not be right to just sort of brush them off aside because to be fair, I mean, Trump has generally been a person of his word. So I think if he gets the sense that the market, he likes the markets going up, but I think if he gets the sense that people are being disdainful of his tariff talk or some of these other things, they're going to go in. And I think it's wrong just to sort of say just because he hasn't done them yet. And by the way, it's been less than a month since the inauguration. So just because there's a lot going on doesn't mean that nothing will go on.
Yeah.
So I think it's right to stay focused on them, but not necessarily right to freak out about them every time that something is.
There's a great Ray Bradbury novel called All Summer in a Day, and it kind of feels like that we're waiting. It's been only a month, but it feels like a longer time because there's such a heavy flow of news. But yet the market continues to go up. And I think for our viewers, whatever their political leanings, they want to make money. But to your point, what if Trump does impose the tariffs, which could be inflationary? Then the Fed may have to react. The bond market appears to have already reacted, Steve. And I think your job is to project to your clients, what is the element of risk in the market right now?
Right now, to me, in a strange way, the biggest element of risk, or the biggest thing to fear for me, is the lack of fear itself. I think the fact that we see our customers viewing every dip as a buying opportunity, and I understand why, because essentially for the last 5 years it's worked. So people are going to keep doing what works for them. So that's not a criticism, but it's basically just the idea that the bigger the dip, the bigger the buying opportunity. Or once you get into a trend, let's follow the trend. Let's keep jumping on it. One of my things I've been advocating is don't fight the tape, because that's a fool's errand, but insure against it, because there's a lot of pitfalls that could be out there. You can do this, but not necessarily be all in all the time. Consider some hedges when they're appropriate.
I like the paraphrasing of FDR. What is that again? The biggest thing to fear is the lack of fear?
The thing I fear most, I guess the thing I fear most is the lack of fear itself.